And ladies and gentlemen, welcome to this webinar, which is very timely given what's going on in the United States of America and issues in Asia. And we are really, really pleased to have Stephen Bird, the CEO of Aberdeen Standard, on with us. It's a great pleasure and a privilege, Stephen, so thank you. Stephen, in many ways, epitomizes what the Asia Scotland Institute is all about. It's about people who've left these shores in Scotland and headed to and engaged with Asia, and in his case, ended up with some very big roles indeed. Indeed, we had Alan Joke from Unilever on not so long ago, who has a similar Scottish antecedents. And whilst it's a long time since Stephen left Motherwell and his family there to head east and west, and he was in America as well, and South America, he's achieved an enormous amount in a very exciting company, which of course was a merger of two famous companies, and he's now been repositioning it. So, Stephen, thank you, and thank you also for your support for our mission over the past years, which we think is hugely important in terms of educating and inspiring tomorrow's leaders.
You're welcome, Roddy. I'm very happy to be here.
Thank you, thank you. So I wonder if we could start off by talking about how does you assess the leadership challenge that you've assumed at Aberdeen Standard?
Yeah, well, welcome everyone, and thank you for the opportunity and for your interest in today's discussion. So, of course, I took over as CEO on the 1st of September. So taking over in the middle of a pandemic is a somewhat unusual activity. I was fortunate that I was appointed on July the 1st to the board of Standard Life Aberdeen. So I was able to have a transition with Keith Skeog, my predecessor. So actually I spent a couple of months with Keith, who was really tremendous in helping orient me into the company. But perhaps I can mention why I found this particular opportunity attractive and why I think it's an important one. The predecessor companies I came across, Aberdeen Asset Management, and founded by Martin Gilbert 37 years ago, and Keith Skeog running Standard Life, both companies I came across because I distributed products for them when I was in the Far East. So when I ran City Asia, that's when I first came across the two predecessor companies. And of course, they were merged 3 years ago. And it's important for the UK, it's important for Scotland that these companies establish a new single identity as a global investment manager. Very, very important. In a world economy where an asset manager can take sources of capital and put them to work, it's incredibly important in a pandemic to think about what's the best way to do that. And we can only do that effectively if we've integrated this platform well. And that's the first order of my business, is to complete the integration and really establish the reset as a single entity.
Did you find that there were big cultural differences between the two companies that you've had to deal with?
Yes, there's a lot been written about this in the press. And let me sort of focus on the strengths, but of course, two strong companies that have differences that can lead to some conflicts. Aberdeen was really a tremendous emerging markets company. So it was famous for its global emerging markets investments prowess. And Hugh Young, who still works for the company, is really a storied investment manager. And that's, so Aberdeen was known for for emerging markets. It was also known as an acquirer of businesses. So Martin really, put many businesses together and successfully integrated them. Standard Life, of course, was known as a life and pensions business, very successful life and pensions business, and is almost 200 years old. So the company was born in 1825, headquartered here in Edinburgh. And when you go to bring two companies together, what do you want to do? You want to get the best of both of them. Their respective strengths, you want to be able to identify them and amplify them. Now, I think part of the challenge in doing that, of course, is technological. And you need to integrate the systems, establish one asset management basis for doing business, establish one financial accounting system. Now, those things are almost complete. In fact, my first order of business was to review the 4 programs of transformation and make sure that they actually land on time. That transformation largely continues and completes, in fact, during 2021. Now, one of the things that I did in taking over, which I think was important, was to really explain that I neither favour Aberdeen nor Standard Life. In fact, I was asked when I came in by someone who will remain unnamed, I think you should keep a tally of how your decisions may favour Aberdeen or favour Standard Life. I said, you do not want me to do that. This is one of the conversations I had, because I have to be, and I have to demonstrate that I'm objective. Because if I'm objective, we're going to optimize for this new company, and that's what I'm doing. So I think I've tried to banish the potential favoritism of either side that can exist in mergers.
You've been doing some sort of tidying up and cleaning, obviously, and slimming down. Is Parmenion the most recent thing that you've decided to sell on? And if so, why?
Yeah, I think maybe it would be helpful, Roddy, if I let me describe the company. Because if I describe the company, you'll see where the Parmenion, the latest piece of news at the weekend, fits. So when I came in, I looked at, people tend to think from the outside, you're a global asset manager. That's correct. So Aberdeen Standard Investments is a global business, so 500 billion of investments. But in fact, there are 2 UK businesses, and I'll describe the first one. The advisor business, this is where the independent financial advisors in the UK, use our platforms. So they borrow the scale, the research capability, they borrow the investment capability, and it allows them to run their business and professionally serve their clients. That business, the advisor business, we actually have 51% of the UK independent financial advisors. A tremendously strong position. And that's actually where Parmenion comes in, because I discovered as I evaluated the business that we had 3 intermediary platforms. So there's RAP and Elevate and Parmenion. Now, RAP and Elevate both share the same core technology. They share FNZ technology, and they have combined about 65 billion of assets on them. Parmenion was a more recently acquired platform, also an independent financial advisor platform, and has about 7 billion of AUM. So when you have 3 good platforms, you merge 2, create 1, which can be a market leader here in the UK, and you can divest of the other. And what that does is, Parmenion is a great platform. It's terrific technology, great people. It's based in Bristol. And that business will go on to thrive in someone else's ownership. And that is part of the cleaning up and the sort of decluttering that I'm doing. And I'll continue to do that. There are more. Any company that started life almost 200 years ago will have areas that it can be decluttered. And that was just one of them.
It certainly will. Yeah, thanks for that. I know that we are talking about Asia, and we'll talk about that a wee bit more in a minute, but you have a broad global business. You've got a very significant footprint in the United States, I think based on Philadelphia. And of course, a lot's been going on in the United States, and we have a new administration for sure coming in, whatever the president does or does not think. How do these global events impact your business? I mean, do you feel you're US long and Asia light, or what? How do you feel about these global markets? And you said before that you would spend time in Latin America and South America.
Yes, I mean, so the first thing that I would say is that we are absolutely committed to being a global investment manager. So we're actually in 40 countries. Now our footprint in Asia, we have an extensive footprint in Asia. So we're in Japan and Korea, Hong Kong, Taiwan, mainland China, Indonesia, Thailand, Singapore, Malaysia, and Australia. So we have really from Japan in the north to Australia in the south, and we have significant joint venture business in India with HDFC. So we have a large Asia business, and we have a US business. Now, the US business is actually relatively smaller in terms of the scale of our total business. The US is about probably about 10% of our business overall. But the UK is still the world's largest capital market. The US is still the world's largest capital market. So very important that we still have a presence there. We also have, so we're really a specialist equities business in the US, and we have also a successful commodities ETF business in the States. Now, we're committed to our global model, but I think that we can recalibrate the global model for growth. And by that I mean, I think that in Asia, we can concentrate our firepower in fewer hubs. Because if you think about, really, you want to be addressing the North Asia opportunity, the Greater China opportunity, and the ASEAN opportunity. You don't need to be in every location in order to be able to access that opportunity, because perhaps, as you may know, that Asia for the wealth management opportunity is really a wholesale market, which means that Asian clients naturally come to their bank and get wealth advice. Now, those banks are fully distributed in Asia, so the key for us is to be able to partner with and distribute through the wholesale platform. Now, you asked about what's going on in the world economy and markets and how does it impact our business. Really, one of the reasons why I took this job is because, having been, an active participant in global markets for the last, couple of decades, I thought that Standard Life Aberdeen has got a brilliant vantage point into what's going on in global markets. And that's because we're a full suite house. We have equities, fixed income, multi-asset, private markets. We really have the full spectrum of asset classes, and our clients demand that we have, we consume research globally, and we help identify the right solutions for their portfolios, for their obligations through the years. So what's going on in the markets? Of course, COVID is the thing that's had the most pronounced impact. In fact, this has been a sort of short, it's been a brief but sharper impact on growth than we've seen, certainly in the past century. Now we are now seeing quite a sharp recovery from that, and that's because what is unusual about this economic slowdown, it was really by intervention. The slowdown was mandated by lockdown, which restricted economic activity. So when you do that, but you have the expectation that that can come off because of the vaccines, we've seen this rapid recovery. Now, there's something of a reality beginning to dawn, that it's not just the discovery of the vaccines, of the 3 vaccines, in fact, and we know today that the UK was the first country to actually approve the use of the Pfizer vaccine. But the reality is, how do you get that vaccine into the global population? And that's going to take some time. The other reality is that there is going to be some significant scarring of the economy, because there has been an acceleration of trends in the world brought about by COVID. So we're using one of the accelerations of the trends, the greater use of technology, the greater use of working from home. That has resulted in an acceleration of disruption of business models that was apparent before, but has been accelerated. So the recent pain that we're seeing in the high street, of course, it was a tough sector before, but it's quite clear that this digital training, this e-commerce training that the world has had, will result in a permanently higher level of economic activity that's done virtually. And business models are having to adjust to that. And that's just one of the factors that we are modeling and playing out as we analyze what is the impact on investments for our clients.
Stephen, thanks. You've been quoted as saying that three great trends of the modern world are globalization, urbanization, and digitization. And you're already touching on this now. You're sitting in a fine building in St Andrews Square. What happens to real estate in your portfolio? Because banks clearly are taking a tough look at that.
Yeah, so we've actually made, we've started to make adjustments even to our building here, and we're making adjustments to our other buildings as well. And the first thing that we did, of course, was to make them as COVID secure as we could. So when I came into work this morning, I had my temperature taken as I walked through the lobby, as do the other critical workers who are here today. We made we put direction routing in through the building to make it secure, single use of elevators, etc. But what we are doing is seeing past this lockdown period. So, for example, we've created collaboration zones here in Edinburgh, which are much more, you can think of them more like airport lounges rather than sitting cheek by jowl as a market trader in a line of desks, which was actually the way our trading floors in Bowbell's house in St Paul's in London. We had hundreds of traders per floor pre-COVID, and we have now actually cleared our entire first floor at Bowbell's house in order to create these collaboration zones, which allow people to come in, work together in a manner that is socially distanced. They can use whiteboarding, obviously, laptops and iPads, etc. But they can have a blended environment. Now, it's important. We'll never go back to having 5 days a week, everybody 9 till 5 in the office the way things were before, and that's a good thing. People consuming, burning carbon to come from one building to another building to sit and do email on a screen was never a good idea. So I think that we are seeing what will be the end of presenteeism, which was never a good feature of any company. So I think we'll take the benefits of digitization and what we've learned about how we can be productive in a remote setting. And we're doing this, of course, globally. We're doing this in Asia, we're doing this in North America. But we also will configure our offices that they facilitate coming together, collaboration, innovation, solving of client problems in a post-COVID world. And we want to be at the very front of learning those practices, because this is a competitive test for all companies. How quickly did we adapt to the COVID environment, and how quickly will we come out of the COVID environment? Because business is a competition. You mentioned globalization. One of the trends, and you're right, I've been quoted in saying, globalization, urbanization, and digitization. Globalization, we are seeing some of that being wound back as a consequence of COVID. So we've seen a shortening of supply chains, for example, and we've seen China very much focus upon self-reliance, and that's partly been because of the experience of since 2017, the global trade war between US and China. So we've seen supply chains get shorter. It's also been, and a corollary impact of that was the restriction of Huawei. So China has focused upon ensuring that it can have digital self-reliance, the development of wafer technology, the development of 5G, without relying on the rest of the world. So although globalization, I think globalization certainly was the dominant theme, certainly from the 80s right through until very recently, and it will still play out. I do think that there's a modification to the nature of globalization that's come about as a result of COVID. Digitization, however, has been accelerated by COVID. And I think that digitization, we often forget that the Internet of Things 11 years ago, we're an iPhone 12. So 11 years ago, when we started to connect point to point for the entire world, smart devices, brilliant apps, fast networks, cloud computing, that has really been the force that is changing everything. The democratization of technology and the democratization of finance and choice. And I think that clearly will continue and be the dominant theme as we go through the 2020s and beyond.
Sure. Stephen, thanks. Before handing over to see if we get questions from those who are following this, I want to ask you a question about the central and almost most important thing in any business, which is the human capital. One of our missions is to get Scotland, and young Scots particularly, to wake up and to remember that embedded in their DNA was this extraordinary spirit, which in a sense you manifest and others we've spoken of getting up and getting out and getting engaged there rather than staying at home. And yet, in recent years, it appears that much of that spirit and energy has been dissipated. So there will be a lot of younger people listening to this, and if they're not on the call now, they'll pick it up on YouTube when we broadcast it. And what would your message be to them as to how to get engaged? And perhaps on the back of that, what would your message to the government in Scotland be to wake up and get out there and get engaged as well?
So I think, and I'm asked this question a lot by colleagues, and the thing that certainly has worked for me my entire life, I began my career in the steel industry, and I was hired from British Steel to go to GE Capital because Jack Welch wanted to do Six Sigma, which was to improve the problem-solving capability of General Electric at the time, which was the world's most valuable company. And from GE Capital, I was hired into Citi in 1998. In every single part of my career, I have gone towards the problems, always gone towards the problems. There's a fairly kind of obvious sort of logic to that if you take over something where the problems are self-evident, then improvement can be self-evident. Also, if you go into an area where there are problems, it's packed with learning because you have to evaluate how can we fix this. It also means that you have to be deeply engaged with people because business is a team sport. So you've got to, I think that if you go towards problems and you speak simply and clearly and you engage the brains around you, you learn faster and the team obviously gets the solutions more quickly. Now also, I've been very fortunate that I've been presented with, I had this inner belief, I always had this, that if you solve a small problem, what happens is somebody gives you a bigger problem. And that's actually the very nature of the world economy. You solve a problem for somebody gives you a bigger problem. And if you have the confidence to know that will happen, then you avoid this trap of saying, what's the job going to be after this job and after that job? You don't need to worry about the job after this job, after this job. You need to worry about this job and you need to perform because you need to tackle this opportunity. So I think that the curiosity, I think just to be curious about what is going on. There's more going on in the world. That we keep saying we're at the point of maximum uncertainty and then it becomes more uncertain. There's more uncertainty right now than at any time in my working career. I mean, we've just gone through this incredibly novel and messy transition of power in the States. I mean, the things that we saw we've never seen before. We've never seen somebody win an election and the sitting president contest, well, I don't think it was a fair competition. And so this is a brand new thing that we're seeing. We've never seen a simultaneous global pandemic when you've got 8 billion people on the planet and they're more interconnected by communications and travel than ever before. We've never seen a situation where industries are sequentially being disrupted at the pace that they're being disrupted today. All of that presents opportunities. So for the young kids in Scotland watching this, the world is full of opportunity, but you've got to have a perspective beyond your own local situation, because by definition, the opportunities are bigger if you look outside. They're big here. And I find in our company, we've got fantastic opportunities right here in Edinburgh, But our company's connected to Singapore, Jakarta. It's connected to the far-flung reaches of the world. And that means we've got to have the perspective that is impacting our customers in Kuala Lumpur or in Taipei. And that means we've got to consume information quickly and come to conclusions. And so my advice is you've got to go towards the problems. I mean, ideas don't work unless you work. And the best expression I ever heard was, in that regard, was, the harder I work, the luckier I get.
Very good. Good. Yeah. And you presumably recruit from the universities and the business schools in Scotland. And
we absolutely do.
To look at your company as a great place to work. And
we absolutely do. In fact, we just have had a large intake of graduates and interns. And I actually just did, even during COVID, I met all of our interns, and just like this, and we had a fantastic roster of talent that came in. And we did videos, me and all of the interns, and we talked about what their hopes and dreams and aspirations were, and what their fears were. And we are absolutely in the market for talent all the time.
Excellent, good. Well, let's see if we can rustle up some questions. I'm sure we can, from those that are watching, Stephen. And thank you so much for what you've shared with us so far. I'll come back to you again in a minute later on. Doug, you're the marshal now of seeing who we've got questions from.
Thank you. Stephen, if I could perhaps start just first of all, before introducing audience questions. I appreciate your comments about the impact of COVID on the markets, but it does seem to me that the West generally, America and Europe in particular, are struggling to generate growth. And I wondered whether you sort of subscribe to that, and whether you are confident about Asia in a different way. And if so, are there any particular places in Asia that you think are worthy of interest or attention?
Yes, so I think it's useful to, as an investor, when we think about markets, I think it's very important to look at the longer trends, because we can much more accurately describe the longer trends. And you think what's happening in the Far East, really certainly since the opening up of China, since Deng Xiaoping in 79. I mean, really what's happened is the world is moving east. I mean, we've seen the Asia really driven by China and India. We're invested obviously in this trends of both, but China has gone from a country of poverty to being the fastest growing economy in the world, second largest economy in the world, largest consumer economy on a purchasing power parity basis already. So there are the exogenous growth driven by populations and driven by the expansion of the middle class and driven by the financialization of the middle class in Asia is reshaping the world economy. Now, I can think of it this way. The 20th century, the company that I spent the last 21 years with, which was Citigroup, which was formed in 1812, the 20th century was the Great American Century. Because if you think about what happened here we're sitting here in Edinburgh, in the late 19th century, 1880 or so, the Great Britain had 25% of the world economy. And it ceded the lead position to the US as the US grew through the 20th century. What's happening now is the US is going to cede that position to China for the 21st century. And we talked about supply chains. China and the supply chains of the Eastern Hemisphere of the world have got higher exogenous growth rates. So for our company, absolutely in the long trend, we're part of that. We are significantly invested there. We've got talent there. We've got employees there. And we help take capital from the rest of the world to help fuel that rise. Now, if you overlay that big trend with the trends we spoke about earlier, which was about digitization, one of the things that I experienced so much living in the Far East was leapfrog technologies. So when the smartphone came out, we saw many economies completely jump straight past, the browser experience to the smartphone. And we've seen, look at the most valuable companies in Asia today, Alibaba and Tencent, driven by embracing a mobile first, commercialization of social media, commerce, and finance has driven the largest companies in the Far East. So those trends are the things that I think that we need to be aware of. Other trends that are happening, healthcare in the Far East, the good doctor business that Ping An launched, which pre-COVID was taking virtual healthcare across all of China. And of course, in COVID has again been accelerated. So when I think of, to your question, where do we seek to invest? Now, I'll counter that. You mentioned, the US and the UK. Counter that with the fact that of the innovation that has come out of the United States. Just think about Google, think about Amazon, think about Facebook, think about the real business disruption that came out of the brains on the West Coast. So the US still has got this, the Western economies still have got the capacity to be able to identify the best use of technology, how it disrupts business models, and has a willingness to take the risks. So it's not over for the West. The big trend is the world is moving east, and that's just driven by the factors that I described earlier. But the last thing I'd mention in this topic before we open for questions is we're in a world of low numbers. I lived in Japan. The Japanification, I call this the Japanification of the industrialized world. And that's what's happening. So I think we're going to see low interest rates. I think we're actually going to see very low levels of inflation for a sustained period of time. And of course, there are pockets and patches, but I'm talking in aggregate at this point. And I think that we have to plan for a world that is going to have to compete in low numbers for some time. And that's why there's such a search for yield. And that's why there's such a search for advice in terms of where is the differential growth between countries, sectors, and that's why this business, I think, has a great future in answering those questions.
Stephen, thank you. We have a question from Peter de Vink. Peter, if you'd like to ask your question, please.
Thank you very much for a fascinating talk. Now, Stephen, the culture difference between Aberdeen and Standard Life is as different as you can imagine. And I like the way that you talked about trying to approach a problem head on. And I think that will be your biggest problem, that you have two units that have a culture that is completely different. And to merge that into one unit will be a very, very big task. I wonder how you like to comment on that.
Thank you, Peter. And you're right. I do like to tackle problems head on because I think if you're a clear communicator and you embrace the challenge and you're explicit about recognizing the strengths, the relative strengths of each company that has come together to be a single company, I think that's the best way to do it. Standard Life has got fabulous culture in terms of Standard Life has stood for ethics. It has stood for probity. It has stood for careful, trustworthy investment through time. And it has processes of governance and compliance which were rooted in those values. And being able to add to that the commercialization of those skills by being able to extend that capability into a global sphere, which is really what Aberdeen brought, very complementary. That's the goal, certainly. Now, I can tell you, my predecessor, Keith actually had already brought a lot of this together. And we have a single executive team. I lead that executive team. We don't have two teams. We have a single investments group led by Rod Paris. I spend time with the equities group, the fixed income group, the multi-asset group, the private markets team. And nobody now is saying, well, Stephen, at Aberdeen, we did it this way. At Standard Life, we did it this way. Because I banish talk like that. I welcome solutions. Wouldn't it be best to tackle it this way? I would suggest that we ought to consider this aspect. Quite quickly, when you lead in a direct way and you demonstrate that we've only got so much energy and it has to be forward-looking, that's going to help the team. And that's what, this is not my first rodeo, Peter. I've been managing businesses, and we mentioned cultural differences. Do you think there's a cultural difference between managing a business in Japan and managing a business in the Philippines? Or managing a business in Japan or running Guangdong Development Bank in China, in the Greater Bay Area? Very big differences, quite a bit of antipathy between employees, but people like to win together. And I think that clear leadership, direct leadership, and also calling out bad behavior. And I don't have any hesitation in calling out bad behavior, because you've got to do that as a leader. And I think I've got every confidence. I'm 3 months into the role, and you've seen some of the headlines. We're making decisions already. People are very supportive. People were ready for a change. But you obviously know quite a bit about the culture of these companies, and I appreciate you asking the question.
Thank you so much. Wonderful answer.
Thank you.
Thanks very much, Stephen. And interestingly, in mid-December, we have Sunil Bakshi, one-time.
Oh, my old colleague.
Yeah, and he's going to talk about leadership in different cultural environments. And of course, he is now heading up in Europe, Mitsui. So he's going to talk about that. So if you have time, you should listen in.
Excellent. Yeah. I'd like to join that. Yeah.
Thanks. Doug, back to you.
Stephen, we have a question from Ian Baxter. Ian, if you'd like to ask your question.
Stephen, thanks for some really interesting comments. I'm interested in you sort of picking up on what you're saying around low numbers and yield, and sort of having heard from your colleague Keith Skio and Kirsty Hamilton earlier in the week at the Hutton series on climate change. I'm interested in sort of how you drive, as the chief executive, kind of environmental and net zero behaviours within the company as a potential leader working within investment management globally.
Thank you for your question. I'm passionate about this, and one of the things, every investment manager is saying, "Oh, we do ESG." I refer to it as everybody's already bought the T-shirt. But what exactly is it? Well, environmental, social, and governance, what it really means is we're better at investing. Why? Because if we understand environmental risks, consequences, and costs for a business that we're investing in, we will make better choices between businesses who've got the capacity and the capability and the tools to mitigate those risks. Now all of a sudden, we've quickly gone from a headline discussion to a risk management discussion. Oh, do you have enough understanding of that business that you're considering investing in, its equities or its bonds, that they have got an appreciation of the risks and the tools to manage the risks when it comes to environmental risks, when it comes to social policy? We're living in a time of hugely changing social values and policies, and how we manage employees and teams. Being able to excel at attracting the best talents, mobilizing them in the right way to solve economic problems, and being able to have systems of governance that are effective but not unwieldy, that are effective but not heavily centralized bureaucracy. Now we're talking about, this is a whole different science of investment. Now, so when I came here and the team said to me, oh, we're very good at ESG, I said, that's great. Let's have this conversation. And that's the conversation that we're having. Now, we have invested significantly here, actually signed off on a significant investment, which builds on prior capabilities to be able to understand and measure the state of a company's ESG capability. Not just when you make the investment, but through time. Because as an investor, you don't want to just know that I did a wonderful due diligence, 6 years ago when we invested in this company. You want to know the real-time evolution of the risk and reward as associated with those factors. Now, I think that there's a window, and it's probably rapidly closing. It may just be 3 to 5 years from now, where this just becomes the hygiene factor for investing.
Yeah.
And that's, I think that's really what's happening. So, but it is a technical science. Now, I also happen to also share the values of, I'd like the planet to be available for the generations after us. I'd like the planet to be available for my kids and their kids. And so I'm deeply committed to the values of ESG and diversity and inclusion and employing talent and being able to access all the talent of the world. But I also recognize that we have to have the science around it to make the claim and to deliver on the promise of ESG. Does that address where you were going with that?
Yeah, no, I think it's good to hear. Thank you.
Well, perhaps if I could go to Anna Miller, could you ask your question, please?
Hello. Gosh, you're fabulous. Well, there's great things ahead, I think, with you at the helm. I think we're all excited to hear your thoughts on things. Something I want to just ask you about, given we've had COVID and we've all been sort of locked down in a very local sense to kind of within 5 miles, local sports and exercise, local shopping, local community care and so on. And I think some of us actually have really enjoyed that. It's been a bit of a positive and not traveling and on that plane to London on every Monday. But so we've gained that, and at the same time we've had globalization by using Zoom and Amazon and so on and so on. But what do you think? How do we come out of it, keeping our human, our local, but remain global?
I think you and I share a lot of the appreciation for the good things that have happened as a consequence of COVID, because I think that the localization of a better sense of community, a better sense of relying on our neighbours, being a better neighbour, being able to have a forage out and find the local vendors and produce and supply chains that are much shorter than before. Though that's a fantastic feature of what's happened. And it used to drive me crazy living in Hong Kong to know that a lot of the fruit and veg that we were eating had been shipped, in ocean liners to get to us. And I used to think, this is insane. You imagine the amount of carbon that's been burned in this thing. This has been picked somewhere, wrapped somewhere, frozen, stuck in a ship, and then shipped all the way to us. And then it goes off in 5 minutes as a consequence as soon as it hits the air. And I thought, this is not sustainable. And it wasn't sustainable. So I think that what's happened, this being able to reactivate local creativity, where people, we've seen it here in Edinburgh, where businesses have been able to adapt very quickly. It's fabulous to see. And so I think that we want to, I'm hoping that this has shown us that the error of just the big, long, the cheapest thing, wherever you can source it, just because you can find it and it's real cheap on the internet, doesn't necessarily mean that you should ship it from, 10,000 kilometers away. So I think that businesses like ours need to have a blend of an appreciation of, we're very driven by ensuring that the communities where we live and work are better because we're here. So we want to, and that's got to be tangible, that's got to be real, and we try to do that, and I'm committed to doing that, and hopefully we'll do more of that. and that applies to the communities, whether it be here or the community in KL or Singapore. But I think that we will permanently have seen, I mentioned this earlier, that I think that I think there will have been a permanent rollback of some features of globalization as a consequence of this, because we know that there's now a global pandemic is a real risk. This may not be the last one, won't be the last one. So if you say, if that's the case, we need to plan to make ourselves less vulnerable. And that means more resilience. And more resilience means greater local interconnectedness, because that interconnectedness will be the last thing to break. So I think that as we look at resilience, and as you know, we have to do these continuity of business, exercises and everything, as we look at them, we're actually applying that lens. So can we make ourselves more locally resilient? And I think that people, individuals, have focused on that. We're seeing it in the savings rate. Savings rates have gone through the roof. So for folks who've been fortunate enough to still be earning during COVID, they've actually been saving more. And I think that that's because we've got a sharper appreciation of the need to be resilient. Okay.
Stephen, thank you. We have a question from Andrew Milligan.
Thank you very much indeed. Might I be so bold as to ask two questions, but I'll ask them very quickly, I promise. The first is active versus passive. Obviously, Aberdeen and Standard Life Investments were active managers, but they're facing all the pressures of the passive competitive threat. And I saw that you've made some statements about passive investing recently, so could you elaborate on that? Secondly, if we go back to Asia, obviously one of the hubs that Standard Life Aberdeen has been using is Hong Kong, which is becoming extremely politically sensitive at present. So how do you see the firm navigating its way through the difficulties in Hong Kong at present? Thank you.
Great, thank you. So the first question, active versus passive, let me explain this. So we are a very committed active house, active management, active investment. Language here is very, very important. ETFs, exchange traded funds, an ETF is a delivery mechanism for a fund, a delivery mechanism for an idea. Now, what I've looked at here is I want to make sure that this business, everything we do is, I said, very 21st century. In other words, it's compatible with the economies we're moving into, not where we've been. Now, for that reason, I've said we must have the ability to use the most effective delivery mechanism, which is ETF. Now, that's sometimes it's reported as meaning, oh, so you just want to have indexation, just passive, you program it and forget. I don't mean that. What I mean is that, yes, we will do, there's pure beta, just pure indexation. But then there's smart beta, there's enhanced beta, there are thematics where you've got an idea and you say, I want to understand the companies that can thrive post-COVID. And then you apply an investment due diligence lens to identifying those companies with those attributes. You want to be able to deliver that in the most efficient means possible, even if you are dynamically managing it in the future. So I think in the future, we will see more actively managed ETFs because it's an efficient delivery mechanism. I also think longer term that blockchain, distributed ledger, I think will also be a mechanism through which you can embed compliance and at a transaction level, and blockchain will end up being a delivery mechanism for funds as well. So we're an active house, but you need to have both. You need to have the ability to be a comprehensive provider to a large insurance client. Hong Kong. So I've spent, as you know, I've got residency in Hong Kong. I've lived in Hong Kong for 7 years. I also spent a huge amount of time in the mainland. I served on the board of Shanghai Pudong Bank. I actually ran Guangdong Development Bank. And I think that the way that Greater China, the way that Beijing thinks about, I've always embraced the plan, which was the Greater China plan. So I pay I'm a studier of Chinese history. I look at everything that Xi Jinping has done since 2012. And I think that if you put yourself, I often say, why don't you just try and walk in the shoes of Xi Jinping and ask yourself, how do I solve these problems for the greater good of 1.3 billion people? Now, so I would say that if you look through the longer lens, this is the Middle Kingdom we're talking about, I think that if you look through the longer lens, the direction of travel of the Chinese society is quite clear. And I think that if you expect, and I think you would expect me as a custodian, as a leader of a business, to align this business with that greater opportunity. So I try to see past the headline news of the umbrella protest, of the actions that are taking place in Hong Kong, in order to ensure that we can position the business well for the longer term. Now, the short answer is, I think that Xi Jinping has got a complex job. I think that when you're melding societies with different values, it is complex and it results in conflict. And I think that we sit outside that, because what we are doing is we are there to provide greater value for Asian investors. And that's what I'm focused on.
Stephen, thank you. We have a question from Martin. Martin, would you like to ask your question, please?
Thank you very much, Doug, and thank you, Stephen. The Asia Scotland Institute obviously tries to be rather broad in its outlook about Asia, but please excuse me if I go back to China again, because it does remain the elephant in the room, I think, for a lot of us. And having just left there after 32 years there, I think all of us continue to have a lot of interest in it, not just for the political reasons, as the last question, but also for economic and financial investment reasons. So I'd just like to ask you, in relation to a comment, I think this week, from the head of advisory at Willis Towers Watson, who suggested in an interview that investors in the future should be allocating 20% of their portfolio to China, which would be up from usually around 5%. So I think sort of three parts to the question. Do you think this is likely to be the common investment advisory position, growing the portfolio for China in your total portfolio? How do you feel about that from a risk perspective? And you've been there a long time, obviously, so you understand the risk. And also, how do you relate it to your approach to ethical investment that I think you've talked about publicly for Aberdeen Standard Life?
Yeah, well, I think the question about percentages, and you would expect me to say this, but it's actually what I believe. The question of percentages comes down to what is your investment horizon and what is your investment objective. So it really comes down to the financial needs analysis. Do the financial needs analysis, because obviously, if you're a very late stage investor and you're very interested in the preservation of capital with very low volatility, that's a different answer than if you're in your 30s and you believe in the Asian century. And if you believe in the Asian century, maybe you want to have more than 20% of your capital invested there. So it would come down to the investment horizon. I do believe that China has successfully, 10 years ago, people were very skeptical that China could localize and consumerize their economy so much. It was so export driven, and everybody talked about the middle income trap, and could China actually, had any society ever before been able to get up into the high percentages, 50-60% of consumer economy like the US has, as quickly as China had aimed to do it? China's been successful in doing that. Massive expansion of local services, massive expansion of consumer business, and hence the top three companies in China, Alibaba, you've got two tech companies and an alcohol and drinks company in the top three, Moutai. So that's a reflection of the fact you've been successful in doing that. So I think that as an investor, I absolutely believe in the inexorable rise of the Far East by populations because we've talked a lot about China, but also India. I think you have to be invested there, and so put that to one side. The ethical part, you got to make decisions. We have ESG funds, impact investing funds, where we do it without compromise. So it's without compromise. So it says what it does, what it says in the tin. So if you come to me and you say, these are my values, and this is how I want you to invest, then we will deselect certain investments. We deselected Boohoo recently for that reason. So we're kind of unequivocal, but you have to be clear about which ethics you're talking about. You need to, some people come and say, I don't want to be invested in any of the vices. So, okay, no tobacco companies. For you, vice, alcohol may not be a vice. So someone else it may be. And so people, we sit down and we go through an investment thesis before we recommend an investment. But I think that if you're invested in one of our ESG funds, we'll be utterly transparent about what you will invest in and what you'll not invest in when it comes to human rights and everything else.
Stephen, thanks very much. I think we've used up our hour, more than that. It seems longer because it's fascinating listening to you. And I'm sure there are a hell of a lot of people who've been listening who are gratified and relieved that someone with your vision is at the top of one of the most important financial services companies in the world. I remember that you talked about, you joined GE when Jack Welch was there. Of course, he had an interesting concept of removing the bottom 5 or 10% performers of the company every year. Whether that's true or not, I don't know. And I'm not going to ask you the question of whether you will need to do that as you lead the group forward. What I would like to say is that we've really benefited from sharing your thoughts with us, from your kindly answering the questions we put to you. And I know there will be a lot more that people will be thinking about when they manage to watch this session on YouTube when we put it out there. So the best of luck to you. Thank you very much for your first outing with the Asia Scotland Institute. I hope it's one of a number. And we look forward to marching into 2021 with our heads held high and on the basis that we will survive to 2022. But thanks for your support, and thank you so much for what you've said today.
Thank you, Roddy. Thank you for the opportunity.
Thanks a lot. Thank you, everybody.